What's going on, everybody? It's Stas here. Welcome back to another video. You guys see that sun right there? The sun is literally right there beaming in my eyes, but we're going to get through this video, guys. We got to break down what I've been buying in the markets as of late, and let me tell you guys, I've been buying stocks, I've been buying REITs, I've been buying ETFs, so we got a lot to break down in this video, but before we do, make sure to get your free money from Moomoo, up to 6 free stocks, each of which could be valued all the way up to $3,500. Just use my link down below or go to StasSurfS.com/Moomoo, deposit at least $100, and boom, you get your free money, guys. And with that being said, let's dive into the video. So let's talk what I've been buying as of late. And again, I've been buying stocks, REITs, ETFs. So I am a believer. Let's get this right. Let's get this out right in the beginning of the video. I'm a believer in diversification, however you want to say. I believe in diversification, not having, just 2 or 3 stocks. I think that's too risky. Well, let's speak for myself here. For me, it's too risky. So I like having anywhere from, 15 to 20 holdings. Right now, I probably don't have 20. I probably have more between 10 to 15 between stocks, REITs, and ETFs. But that's kind of the ballpark I'm in. So I like to buy a bunch of different things because, as we've seen over the past year, certain stocks have done very poorly, certain have done well, and me being diversified, in energy's done well, and some tech names haven't done as well. Me being diversified, that's helped me out. And real estate's been doing pretty well recently, which we'll talk about here in a couple of minutes, so make sure you guys stick on throughout. So let's start off with stocks. What stocks have I been buying as of late? Well, number one is Google, guys. Ticker symbol GOOG. This is one that I've been buying for really just the past week. I think I bought it only one time, this past week that we're in right now. As today's Friday, it's Good Friday. The markets are closed, but I still bought it this week, right? And the reason why I was buying it this week and why I plan on continuing to buy it, especially if it breaks this trend right here, is because, guys, at the end of the day, this stock is clearly I don't want to say cheap bargain basement value, but it is very cheap for the amount that it's been growing recently over the past couple of years. Their revenues, profits are going crazy. They obviously own YouTube, Google search engine. They make a lot of money from a lot of different, areas and, different segments in terms of the business. So this one, out of big tech, I've mentioned in my personal opinion, and we're obviously not going to do a crazy deep dive on all these stocks, guys, but in my opinion, out of all of big tech, with a trailing 12-month P of 22.6, guys, Google is very undervalued in terms of big tech in general. It's probably the most undervalued. That one and Meta, in my humble opinion. And if Google gets under a 20p, guys, I'm going to be gobbling up shares like crazy. So Google, I've been buying it. And not to mention, they're splitting in, when's that split? In July? So what is it now? April? So 3 months from now, they're going to be splitting. So I want to get as many shares without going overboard before that split and heading into the split. Perfect scenario would be, guys, if we do end up dumping here before earnings and maybe we go down to 2,400 and heading into that split, as we're going down now, we accumulate shares. Heading into that split, it ends up going crazy. Who knows what's going to happen? I'm speculating, obviously, guys, but Google's one that I've been buying a lot recently, and with their split, it's going to be very easy. Well, I don't want to say very easy because you still need at least, I think, like 12,000 shares or something like that, or dollars rather, post-split of Google to do this. But you're going to be able to sell covered calls because they're doing a split. It makes the options market way more, selling options way more accessible, right? So that's great. Always great for that reason. So Google, I've been buying a lot recently, and more so in the past week, and I bought a lot in I believe February. I bought a good chunk last time it got down to these levels, right? So Google's number one, Disney's number two, which Disney, there's a lot of controversy around it right now, yada yada yada. We're not going to get into that in this video, but overall I still like the company, right? Bottom line is I like the company. This stock is down a lot over the past couple of months. It's down 33%, and if we pull up the 3-year chart, I believe it's down even more. It's down about 35%, almost down 40%, guys. And this company, it has controversy. Every company has controversy. They're in the headlines, and we see people fighting about these different topics, companies, right? It happens all the time with different companies, the big dogs. Apple. We've seen Facebook. We've seen Nike. We've seen Disney. And I think in the next year, a couple weeks, months, it's just going to be brushed off, guys. I mean, at the end of the day, Disney, the brand, will survive this little short-term turmoil, and not even just what's going on in the news right now, but just in general with the pandemic, with the park sales down a lot. Well, now they're bouncing back, but you know what I mean, right? This is all temporary, in my opinion, and I believe these shares are very cheap. This might be, I don't want to say it's the best deal in the stock market, and I don't even want to say that the shares are very cheap. Don't even quote me on that. But for me, they're at a pretty good value, considering all that what I just mentioned, right? And us coming out of this pandemic, I believe Disney's going to do very well, in terms of parks, cruises, and obviously they're going to do their thing on the content side of things. They've always done that for decades at this point. So I'm buying those two, and honestly, guys, in terms of individual stocks, that's really all that I've been buying recently. I haven't really been buying much. I'm just sticking to the blue chips right now. Really haven't been buying much. Seriously, past couple of weeks, that's all I've been buying in terms of long-term individual stocks. Obviously, I'm trading. I'm doing the short-term trading. We're not talking about that in this video. These are long-term positions. And when it comes to REITs, guys, I started buying REITs in the beginning of this year, back in January. And I actually started a separate portfolio that just has REITs. I don't even think I ever mentioned that ever publicly, but I did that, back in January, and that portfolio has been holding up pretty well, and it only has two holdings. One is Realty Income, ticker symbol O, and the second one is Vici Properties, which owns a lot of the real estate in Las Vegas. They have a lot of partnerships out there, golf courses, the list goes on, guys. That's a really good one for kind of like an entertainment REIT. I personally really like it, and I've been buying that for months. And this one hasn't ran up as much, Vici, as Realty Income has, but overall, it looks like the chart's starting to be in the bull's favor. If Vici starts breaking out of, let's see here, $30, which has been resistance since the end of January, which, funny enough, I think I started buying this REIT in January. Well, I did, end of January, and I think I'm actually green now in terms of the price, my position, right? What's it called here? My average cost, but with dividends, I'm probably up now, or up even more, right? So Vici, if it breaks $30, guys, technically, that's going to be a very big resistance break there. And going back to Realty Income, this chart looks great. I mean, Realty Income has been up a ton in just the past month, guys. It is up 13%, and they pay monthly. So every month I'm getting a dividend, and if I buy more shares next month's dividend is going to be even bigger, and then I reinvest it, buy more shares, and each month the dividend gets bigger and bigger. So I've been buying REITs kind of to just diversify a little bit. And I actually lied. I own another REIT. I just remembered. Jeez, guys, I probably should have took more notes for this video. It's kind of an off-the-cuff video, but another one that I own is STAG. STAG. I've mentioned this before. This owns a lot of the warehouses, Amazon, FedEx. There's a lot. They're actually very diversified in terms of who their tenants are. No tenant owns more than no tenants more than what, 3-4%, if I remember correctly, something like that. So they have a lot of diversification on the tenant side, and this one's down a lot. Even still, guys, from $48 a couple months ago, now it's at $39. It's down 20%. So this is another one I've been buying. Not really recently, in the past month or two, probably why I forgot about it, but I bought it, I believe, in the end of January, maybe early February. So those are 3 REITs that I'm buying just to get some diversification and look at real estate, the sector in general. It's been holding up. I think my portfolio, again, I started a little separate REIT portfolio just to kind of experiment and see how it does over this year of 2022. And it's holding up. I think it's pretty much at, I don't want to say break even. I got to double check, but it's doing pretty well, guys. Dividends, reinvested, it's definitely beating the market. That's for sure. The real estate portfolio. So that is what I've been buying on that end of the spectrum. We're about 10 minutes in, guys. The sun is still in my face. Now let's talk about what ETFs I've been buying before I end off this video. So the staple ETF that I buy every month in retirement accounts, in a taxable account, right? Vanguard S&P 500 ETF, ticker symbol VOO. This is a staple for me, guys. It is a staple. I buy this over time, and that's it. I don't really do much else. I just buy it, set it, and forget it, and this is for the long term. This is for 10, 15, 20 years out. Even if I want to put an amount of money, let's say I come across 20,000 cash lying in the street, and then I want to buy a real estate property with that money, maybe in 5 years. This is where I'd plant that money. People say if you need the money in a year or two, don't invest it. I agree with that. But if you need the money, let's say in 5 years, you might as well. I think the stats show that in a 5-year period, markets have done well. I have to double check that. But if it's 5 years away, I would say VOO, boom. That's where you want to put it, right? So this is my staple long-term, just long-term investment vehicle, VOO. Another one that I've been buying is VOT, which is another kind of staple. It's a smaller holding of mine. VOO is definitely way bigger, but VOT gives me exposure. It's a Vanguard ETF, by the way. It's mid-cap growth. It's a mid-cap growth ETF, and this is one that's been getting clobbered recently, and I've just been buying more of it. This is an opportunity in my eyes to buy as it's down. What is it? Down 20%. It's in a bear market. I've been buying it, guys. I've been buying it, and I believe it pays a nice dividend. Let me see if I could pull it up here on Yahoo Finance, VOT. Let's see what it's doing here, guys. I'm telling you, it pays a nice dividend, a decent dividend, not too great. 0.4%, yeah, not too great, but still, it's better than nothing, right? It covers the expense ratio, most likely. Let me double check. What's the expense ratio? I don't want to give you guys false information here. Expense ratio, yeah, 0.07%. It well exceeds the dividend, well exceeds the expense ratio. So I've been buying VOT, again, VOO, and a new one that I've been buying, guys, and I believe this is one that I started buying definitely in 2022, maybe in January, February. It's VXUS, because me personally, yes, I own a lot of companies that, and some of my U.S. investments in VOO, VOT, whatever, some of these companies do work abroad. They have business abroad. A lot of companies do these days. We're a global world. Well, what's the word here? You know what I mean, right? There's business all across the world. A lot of companies do that. So I do have exposure, and a lot of you guys do probably in that sense as well. But I wanted even more exposure. So I bought VXUS, which is an international. It's the Vanguard Total International. What's it called? Stock market fund or whatever. It excludes U.S. companies. So this is one that I started buying probably a month or two ago, around 60. I think my average cost is like $60, $50, something like that. Pretty much right where we are right now. And I'm going to hold on to it. It's a smaller portion of my portfolio, but it is there because I want exposure to some of the up-and-coming companies, emerging markets, Europe, Pacific, yada, 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 Asia. So, that's what I've been doing, guys. I don't want to drag this too long, but those are the main things that I've been putting my money in right now. Google, Disney, Realty Income, Vici Properties, VOO, VOT, VXUS. That is what I've been doing. So let me know your thoughts in the comments. Hit the like button. Drop me a comment, which I guess goes with leaving your thoughts in the comments, guys. And make sure to subscribe. We're trying to get to 25,000 subscribers. We are freaking close, guys. We are 170 subscribers away, so make sure you guys subscribe and join my Patreon and get your free money for Moo up to 6 free stocks, each of which could be valued all the way up to $3,500. Use that link down below and deposit at least $100, and boom, you get your free money, guys. So I'll catch you all in the next video. Thanks for watching as always. Peace out.